Ladies and gentlemen, S&P pulling that all-time high. Well, it's standard, isn't it? You know, we've got FOMC coming into play and retail sales coming in. The core retail sales, which is what the Fed likes to look at, has actually coming in lower. How many times am I going to say the word coming in? Now, what's interesting is Barclays, an analyst from Barclays was suggesting that if the retail sales came in higher, it would then grant the idea that the Fed is going to be more reluctant to cut the interest rates as aggressively as the market wants. But if the economy is slowing down, principle says that they're going to be cutting. Now, over the weekend, so come Friday, just gone, the statistics for the bet that suggested that 50 basis points was going to be on the table went from 4%, shot up to 60%, come down to about 59%. I know some of you are looking into that, but you can see the uncertainty of the marketplace. And that is very true. We got more uncertainty about the Fed's path than we have had in the past. And we had the most back in 2007. And that was when there was a financial crisis, a genuine one. We're not in no financial crisis, are we, ladies and gentlemen? Let's really think about it. We've got high interest rates. We got inflation that's coming down. Couple of wars in there. Happy days, right? Stock markets are at their all-time highs, S&P in particular. But we know banks have got unrealized losses of around 512 billion. So let's just go back again. 2018 market crash, unrealized losses for the banks was roughly around 250 billion. Stock market crashed. We've now got 512 billion, but the stock market's making all-time highs. This time it's different, ladies and gentlemen. It really is. Anyway, what do you think about the thumbnail? I had no bearing on that, ladies and gentlemen. I will say that now. Mike says to me, look, man, let's use this thumbnail today. This should, be the epitome of what you're talking about today. Yep, that is me, ladies and gentlemen. My 40-year-old me morphed into Joe Rogan's body. So yeah, let me know what you think about it, man, because tonight's thumbnail is going to be even better. And those of you that have been with me from day one will know exactly what this thumbnail is about. So let's get with the program, ladies and gentlemen. We have got activity happening across the board. Bitcoin is just tapped that 2% gain for the day. We're going to be going into the market open very, very shortly, around 25 minutes time. So let's just understand what's going on across the board so that we can get on with the flavor, because we are going into the eve of the FOMC. So if you are new, make sure you're subscribing and hitting the notification bell, because we go live tomorrow evening, half an hour before the actual FOMC minutes and the FOMC projections. So it starts at 7 p.m. UK time. I'll be going live at 6:30 UK time, which is roughly around 1:30 Eastern Standard. So make sure you're there, because it's one of the biggest live streams, and we're going to be listening in to what Powell is going to say. And it's going to be interesting given that the retail sales came in a little light today. So let's get with the program. Mad love and respect. That's a nice shirt. Thank you very much. What's the word on the streets? Well, Octavian Nancy Z. Let's have a conversation, man. Here we go. So, I lie myself. I have to move in so that I fit with this. I need to fix this. Anyway, so S&P makes a nice move to the upside, ladies and gentlemen. Here we go. Look at that bad boy. Look at that. All-time high. Perfect recipe for a Fed pivot move. Okay? Retail sales came in today, ladies and gentlemen, right here. Look at this. So, US core retail sales month on month, which is one of the Fed's primary gauges. This is the primary gauge of consumer spending, which accounts for the majority of the overall economic activity. So that effectively means that if people are spending less money, that means that inflation isn't going to be popping its head up. But we do have a case of potentially sticky inflation, because the core CPI last week came in higher. That's not good. Even though year-on-year inflation came in lower from 2.9% down to 2.5%, people were getting it mixed up like, hold on a second, inflation's down. That's correct. Year-on-year only rose to 2.5%, but core CPI is showing the activity of consumers. And you can see that if that's going up, then that means people are having to pay more for goods and services. But the retail sales today has come in and shown that it actually contracted at 0.1% from a reading of 0.2. So that's good news. Now, what the Fed looks for is a trend. Look at the data. Do we have a trend in terms of people's behavior? Not really. Look at it. Minus 0.1% in June, plus 4.4% in July, the same again in August. This time it's plus 1%, okay? 0.1%, sorry. So it's not, there's too many fluctuations. There's no consistency, okay? And that's what the Fed's going to be always referring to when it comes to the data. When they say they want data, they want to see trends in the actual behavior. When it's all over the place, that's where it starts to make the Fed think maybe we should, maybe we shouldn't start doing the interest rates at such an aggressive cut, okay? Which leads me over into today's article right here. Only a few moments before, not a few moments, but a couple of hours before the actual CPI, core price data itself, the retail sales, Barclays were expecting dollar to rally 1% if the data showed that retail sales came in higher. That means if the core itself came in higher than what it was, as in 0.4%, and it came in at 0.5%, for example. That would mean that dollar itself would have shot up, okay? Now, let's just look at dollar for a split second. In front of you is the S&P. Going over to the dollar itself, you can see that dollar right now did spike up, but now it's pulling back down again, okay? This is a very important zone for the dollar. Now, naturally, when there is an interest rate increase or decrease, a decrease itself devalues the dollar, which means that investors are not going to be netting themselves a better yield or rate of return when they invest in dollar-worthy assets, such as the bonds or holding cash, for the better word, okay? Now, to put this into perspective, ladies and gentlemen, we've got to understand where we are with the dollar and is it consistent with what's going on across the board. So look at this chart here. This is the US dollar index versus the S&P Goldman Sachs commodity index. This is a very important index because it tells us where investors' heads are at, okay? It says here that since the world's major commodities are denominated in US dollars, the two usually are inversely linked. When the dollar depreciates, real purchasing power of commodities importing countries increases and increases the demand. What commodities are we making reference to? Well, the first commodity we need to look at is, in principle, oil, okay? So oil is appreciating, all right? Second one is gold. What's gold doing? Gold is appreciating, and it's moving up pretty well. Forget this movement right here, ladies and gentlemen. And quite frank with you all, the only thing that's moved, okay, if we actually just go over to Bitcoin right now, the only thing that's moved is Bitcoin, and it's moved ever so well. But what's come down? You guessed it. The yen's pulling back. We're now starting to see what could potentially be short-term hedge investors are taking advantage of the carry trade. Short-term. Okay? There's another carry trade principle, which is the Aussie yen, right? Now, when the Aussie yen is going up, hold on a second. Why does that look so familiar? Did we not just put Bitcoin's price up? Hold on, let's just look at Bitcoin's price. Wait a second. Why is Aussie yen going up and Bitcoin going up? Because that is, in principle, one of the other carry trade principles. So what do we mean by that? When the Aussie yen is climbing up against the yen, it means investors are using dollars or yen and then taking those low yielding assets, converting them into assets like Aussie and going out and buying stocks, taking on risk, Bitcoin, NASDAQ, S&P. So as long as the Aussie yen itself sustains this rally to the upside, are we actually getting ready for a bull run? Could this be a huge W formation, which could be getting ready for a rally to the upside? So in the next short term, we could be seeing assets appreciating off the back of cheaper dollar, maybe a more expensive yen, but maybe not so much expensive, which will encourage investors to go over to the dollar, exchange dollars for Aussie, use Aussie to go and buy NASDAQ, to go and buy S&P, to go and buy stocks, to go and buy Bitcoin, okay? when you pay attention to what's going on with Aussie yen, you're then getting a feel for whether they're actually incorporating the yield or the carry trade principle. And what's really good about this is I do use the Aussie yen, and I'll just take a quick snapshot at it because it kind of gives me the heads up on what the day is looking like, okay? Aussie yen has yet to make a break towards the upside, and a good break at that. If Aussie yen actually breaks this Asian session range right here, we'll be going into the red vector candle recovery point over here. That's going to then lead me to believe that NASDAQ, S&P, Bitcoin, and all the other assets, okay, will be going up purely off the logic that they have been accumulating Aussie to get ready to start putting it to work, okay, which means assets will appreciate across the board. Now, although we're going into the big thing tomorrow, it's a lot of people are uncertain about it. So we have to rely on the charts in principle, okay? What's the big money doing? And if we can appreciate that by paying attention to the 10-year bonds market, it's trending upwards and it's taking its time. That's a problem. When the bonds start to rally upwards, but they take their time, it means there is repricing of assets across the world. They're moving money. You can see that we don't really have that much volatility in the bonds market. We're going into FOMC, ladies and gentlemen, and you're going to see this behavior tomorrow. You see a sharp move up, sharp move down, okay? And this drift upwards, boy, if it's going to be good news for the US and we get big rate cuts, the bonds will shoot up. They really will. Because they will then move up, low risk will come on, and so will high risk. They will take anything and everything, okay? But the same token, the yields themselves might take a little bit of a stabbing because right now you can only get 3.5% on a yield. That's no good for people that want to invest in the US dollar. So naturally, what are they going to do? They're going to seek risk. They're going to go to NASDAQ. They're going to go to S&P. S&P's at all-time highs. They're going to want to go over to BTC. Speaking of Bitcoin, ladies and gentlemen, we look at Bitcoin right now and you can see it's done a good job of making a move to the upside. We did well last night with the Platinum members on the projection that we wanted to see Bitcoin take a move to the upside. And what we were looking at is this is the Asian session low. I've been saying this to you all. Focus on the Asian session Monday, the high and the low. Mark it off in your charts and chuck it across your charts for the whole week and do not remove those lines, okay? Here is an example of how we used it. So last night I was expecting Bitcoin to make a climb to the upside. And you can see that this W, effectively it's a little W formation, but I'm focusing on the vectors. And I said to everyone in the Platinum, make sure that you see green vector candles breaking away from this point, okay? If you don't see the green vectors, don't encourage any longs. If you start seeing green vectors breaking this 58,138 region, then there's a good chance Bitcoin is going to start coming back up and hold support at the Asian session low, which if this area does sustain itself, then we may have the low of the week, okay? We go over to BTC and you can see so far so good that it's done a beautiful thing. And go into the smaller time frames, you can see that it all started off with green and blue vector candles. The Asian session midpoint, low point right there. Take that, mark it across your chart, and what have you got? Green vector break in one zone, green vector break in another, okay? So this could be the low of the week. It may be the low of the week, but it all depends on what happens with tomorrow's data on rate cuts, okay? Now, something that's going to trigger the NASDAQ to move up. This story here, Microsoft, $60 billion buyback, and dividend up by 10%. That is huge, absolutely huge. We just go over to looking at Microsoft statistics overall, okay? And, whoa, what we got? Here we go, Microsoft. So this is what we're looking at right now. Microsoft is getting ready for a potential cup. Now, they're not really forming the handle just yet, but $431 a share and looking at their earnings and what have you, they look like the earnings and the sales are doing okay, but there's not really any acceleration. If anything, there is deceleration in the earnings. And that's something very, very important for anyone that invests in stocks on a quarterly basis. You really want to be witnessing the stock showing earnings and sales accelerating on a quarterly basis. An example would be, you can see how it goes from December 31st, 2023, earnings was 26% and sales was 18%. When you go into the next quarter, you can see it's gone down 22 to only 20%, and the other one, sales, is at 17%. So we're seeing a deceleration. We've got 3 quarters of deceleration in this big market cap stock. When you see that happening and all its associates in terms of the Magnificent Seven with Nvidia and what have you, and Meta and Google, when you start seeing these big heavyweights showing a deceleration in their sales and earnings, that could be a sign that the industry itself might be coming into a slowdown, which would then be consistent with the idea of the economy slowing down. Retail sales come out today and it shows a lower reading. The economy is slowing down. But the word on the street, according to some, is that the US itself is effectively, it's going to achieve that soft landing and there ain't going to be no recession. No recession, ladies and gentlemen. Do you think that is... I don't get why the US is not in a recession. Let's go look at this. I always like to look at this. And I think I'm going to go get myself a screen. I'm going to put it up on my wall and I'm just going to have this ticking over. I'm going to get a new computer just exclusively for this screen. The US national debt right there, okay, is just climbing and climbing. Every single person in the United States is debt per taxpayer owes them $269,000. And for every dollar the US makes, they owe 126% on top of it. How does that make sense? Yet you go on a government website and it tells you how to start a business, how to, the best practices, have a business plan. Does that look like a business plan, ladies and gentlemen? Neither does this. I mean, this again is my favorite chart, ladies and gentlemen. So that right there, okay, is consistent with that right there. Remember, we got to pay attention to this bad boy right here. This is unrealized losses from banks. Goldman Sachs has come up first saying they took a loss of 400 million. So in other words, they've got rid of those assets, took the loss and said, you know what, we're done with it. Okay? Unrealized losses. That's what I was talking about earlier on. 2018 stock market crash. This was 250 billion in 2018, going into the end of the final quarter of 2018. Okay? That's 512 billion. But this time it's different. Anyways, we'll talk about that another time. He's released it. Donald Trump releases the crypto WLFI. Join me live from Mar-a-Lago at 8 p.m. Eastern Standard tonight on X Spaces. Set a reminder, be sure to tune in. So it'll be WLFI will be a token on Ethereum that will act as governance token of the crypto project World Liberty Financial. His son and his wife are running the show. What do you think? Rug pull? That'll be crazy. But in cryptocurrency, check this out. The ETF adds 12.8 million despite increased Grayscale selling pressure. So Grayscale always are going to be selling, okay? But remember, 2 weeks ago, 780 million in outflows. Yesterday or last week, it was 436 million back in. Now we've added another 12.8 million. The bull run is about to start. How do you work those figures and suggest the bull run is going to happen? I'm not being pessimistic. I'm not being fuddish either. I'm just trying to work out the information. Where's my mouse? Yeah, I'm trying to just work out what justifies people believing it's going to go up, it's going to go down. All right? You've got analysts like this suggesting that the crash is going to happen if Harris puts her tax plans. Like, come on, man. Is this really going to happen? Says here that, as reported on CNBC, Paulson criticized Harris' plan to increase corporate taxes from 21% to 28% and long-term capital gains taxes from 20% to 39%, as well as the introduction of a 25% tax on unrealized capital gains. And Harris has proposed a 28% tax on capital gains for households earning over $1 million annually. I thought it was for people that are owning $1 million. I thought it was for 100 million. There's so many people trying to translate the idea. This would be suicide, in my opinion. What do you guys think? This would be suicide if she wins. And no one's really talking about it. All they're doing is they're saying, oh, Trump's a liar, this, Trump's that. They're spending loads of time on why Trump isn't dead yet, why this, why that. This is just coming into play, ladies and gentlemen, and that's going to be a problem. That is just going to destroy everything, which could then make sense as to why price is going up. Maybe this could be the idea that equity hedge investors are effectively loading up, getting ready for a hedgeable event. Okay, so they're effectively buying everything opposite than what everybody else is doing. Even by the smart money, dumb money index, look what's going on. Dumb money confidence is extremely confident, ladies and gentlemen, extremely optimistic, okay? And look at the red line. It's getting ready to itch over into an extreme, which means when it hits an extreme, there's going to be a change in the way things are going to be happening. Everyone's going to be pumped about things, okay? But you've got to be very, very careful with it, okay? Now, I've got another article right here about cryptocurrency, which is interesting. Bitcoin. They warn of resistance ahead of a Fed rate decision. Like, do you think Bitcoin is going to hit 49.3? There is an increased downside risk, and it says Bitcoin's possibly retreating to major support at 49.3. Spot CVD metrics have remained flat. Okay, cumulative volume delta. I get it, all right? But I need to look at this. Bottom right, you can see what's going on here. This is on the hour time frame. Zoom out over here and you've got the 12-hour time frame, okay? We have just had an influx of people selling Bitcoin, and that's from this pink stuff right here. Remember, you can't buy if no one sells, and you can't sell if no one buys. You can't walk into a shop and demand to buy everything if he's got nothing to sell to you. Likewise, you ain't going to start a business with nothing to sell and be like, come and buy it. There's nothing for them to buy, okay? Hold on a second. Inverse head and shoulders incoming. Okay. Get the freaking likes up. Oh, yeah, sorry. Shouldn't have said that. Yes, I know the proposals don't have a backing, but just imagine. In reality, yeah. And we ideally hope that's going to be the case, but you just don't know with the politics, man. Anyway, we'll stay away from that environment. But there's been a big wave of selling, and we've also had a big wave of buying. The logic says, based on the activity, from now up until FOMC, we would naturally assume Bitcoin is going to move up, okay? Just from the concentration of bids and offers. Look down below and you can see here that we have had a significant amount of long liquidations coming into play. So when a long liquidation comes into play, that is a margin being hit. And behind the margin that's been hit is an order already to transact on that margin. Because that's how it works. When you place a leverage trade, there's margin that you got to put up. That margin is what you use to say, I want to borrow money from the exchange so I can use 100x leverage. Bad practice. But that's what happens. And the margin that you've got there is the amount of money that you need to put up front. Okay? When you've put that money there, the second you allow price to get to the margin call, there is an order already back to it, because in order to do that, it's not the exchange doing it, it's Mr. Market Maker. He provides the liquidity. So when you're long, he is short. So that if your long gets liquidated, price is going down, Market Maker is getting ready to transact on that short. The short liquidation, or should I say the long liquidation, becomes a buy to cover for the Market Maker because he's short against your long. That's how this game works. So when we see concentrations of lots of shorts getting liquidated, and then we've seen now more longs get liquidated, but that means that we've had a high concentration of buying activity here on Bitcoin because they buy as it drops. The logic says that because we're in a short-term way of thinking, that means that from now until later on, maybe this evening, going into tomorrow, Bitcoin's price might actually just drift upwards. That's the logic. And by looking at the concentration of liquidations down below, it would suggest that longs have been smacked about. They all think now Bitcoin's going to take a nosedive to the downside, which explains why they're saying this. Bitcoin stores as experts warn of resistance ahead. Okay, cool. Then you've got this. Bitcoin dominance soaring to 58%. So altcoins are in the dustbin. Okay? People are waiting for that logic. I mean, looking at this, we can go into here and we see, look, altcoin market itself, Bitcoin season versus altcoin season. Doesn't look like it's happening anytime soon, but I said this before. I don't think that's going to be the case. If Bitcoin drops, everything's going to drop. We're not in that era anymore where Bitcoin goes down in terms of the dominance and then everyone's going to go into altcoins. The economy and the way that money is going to be moved around has to be favorable for that instance to come into play. Now, with the high interest rate cuts that we're looking for, that logic might come through if investors like the idea of cheaper dollars. But when you go back into the charts, yes, you see Bitcoin's making a move to the upside. It's not cleared anything significant, but the S&P is trading at all-time highs, all right? And when a Fed pivot comes along, that's when you naturally expect the market to correct. And that's the problem that we've got, ladies and gentlemen, okay? Backed up with articles like crypto market is volatile and what have you. Everyone's getting all excited about Bitcoin right now. And what I'm suggesting to you all is you've got to be very, very careful because with the volatility comes the FOMO. And then that's when people are going to get shaken out. And the market will always do the opposite of what people think is going to happen. Yes, the market is expecting the market to do well on the back of the interest rate cuts. But the second the interest rate is cut, then the market has to start repricing trillions of dollars. So the first reaction might not be the reaction that you want. It might just slump and then it might pick up steam. Investors might not like the idea that the Fed's only going to cut 25 basis points. They're betting that it's going to be 50 basis points. They're pricing in 50 basis points. 25 points comes into play and Jerome Powell turns around and says, we'll cut it again, another 25 basis points in December. That's technically giving the market what it wants. It's just a little bit of a time delay. Okay? He's moved 50 million XRP, this guy. Whale Alert has reported a massive transfer of 50 million XRP worth 29 million from former Ripple CEO Chris Larsen to an unknown wallet. Maybe it's going to go to 59 cents. You don't know, ladies and gentlemen, with this asset. You don't know. I mean, XRP, this volatile thing. I mean, yeah. A waste of time. Honestly, it is a waste of time. This is even more of a waste of time. I think I've got it in for MicroStrategy. Only because MicroStrategy doesn't hold the amount of Bitcoin that it says it has. It's out there as the marketer saying, yep, we're buying the Bitcoin. But then what happens, the investors that invest into MicroStrategy, if MicroStrategy goes bust and people want that Bitcoin or they want that investment, they can't go to MicroStrategy at all because they'll be like, sorry, margin call. Where's the Bitcoin? It's gone to MicroStrategy. Remember, it's a smaller company, right? And that's what's really interesting. Again, $700 million convertible note. But they declared this ages ago. So I don't understand why it's making the news right now. Wants to boost its Bitcoin holding. A prominent enterprise analytics and Bitcoin investment firm has revealed plans to issue $700 million in convertible senior notes due in 2028 through a private placement. Now, with that being said, when they last made that announcement, it was due in 2030. So this is going to be interesting to see. Okay, hold on a second. MicroStrategy. Come on then. Here we go. Okay, so they've done it. Okay, yeah. So they did the stock split. Here we go. The true amount is offered 800 million of 2.25% convertible senior notes due in 2032. So they're looking for 800 million, ladies and gentlemen. And I've said this before. Statistically, this company is dog. It really is. And it's relying on its holdings of Bitcoin. So you're not investing in MicroStrategy because it's a provider of enterprise-ready analytics and mobility and security software platforms for various industries. And they're buzzing for MicroStrategy as a business model. This company is dog. When I say it's dog, it's terrible. Look at its quarterly earnings. Compare this to another company in the same sector. Look at this. Quarterly earnings December 31st, 2023, plus 127% on its earnings. That earnings itself was the returns it had on Bitcoin. Okay? -6 in sales, okay? Minus 127% on its earnings in March 31st, 2024. That's no good. Minus 5% on its sales. That's terrible. Minus 417% on its earnings and minus 7% in its sales. This is not a company to get involved in from a stock market perspective. Terrible company, but they hold so much Bitcoin. So you're having to rely on Bitcoin's price. What's going to happen if Bitcoin just takes a shoe bag to the downside? That's going to be terrible. These stock investors are going to be lumbered with the idea that they're relying on Bitcoin's price, their holdings. Okay? And it's all borrowed up, man. It's just, I don't get it, but it's an ingenious business model when you think about it, given that they've got 101% debt. You're not earning any money holding this stock. You're relying on their appreciation of the Bitcoin value they hold to keep them in business. Why the hell are you going to hold this stock? Anyway, it baffles me. There's nothing against them, ladies and gentlemen. It's all good. But yeah, we've got some interesting movement in BTC. Does that pretty much answer any of your questions, if you have any? So it's all going to why are we here? That it's not going to go to the shoe bag. No. 90% of YouTubers, streamers, viewers are hella bullish today. Dump. Look, to get you enticed to it all, okay? Yeah, Bitcoin has made a nice little move to the upside. At the same token, the market has opened, and I'm paying attention to NASDAQ. It's made a move up. It's now snapping back down like good old NASDAQ flavor. So is S&P right now. Don't tell me the yen's going up. No, the yen's going down, which is relatively okay. Go to volatility index. It's starting to climb up. Dollar dominance itself is shooting up. But I'd say it's consolidation. Oil is climbing up, which is consistent. Oil yet making the move. Nice little entry there on oil and our platinum setups this morning. So that worked out nicely, hopefully. Start taking some profits on this climb up because there is a green vector candle right there. And then we're just going over into gold as well. So he's being very, very tricky. Or euro, stop run up and down. Very interesting price action. Guys, listen, I'll be straight with you all right now. You got to be very careful with FOMC coming into play. Be very careful because the way I'm looking at it right now with Bitcoin on this time frame here, just in terms of the depth of market and order flow, point of control is currently at the high point right here. The logic would suggest that you'd be expecting the point of control price to go to one point of control to another point of control. But I don't think they're going to do that just yet. What they're going to do is they're going to mark it lower to then try and make the move back up because it's just too good to be true. It's too easy for you to just go into the chart right now because it looks like it's going up. Okay. So anticipate some volatility in Bitcoin going into today. It's going to try and work down to then try and work itself back up. Me, I am really, really tempted to trade, but I don't want to do it because I know that by the time we get towards the time that I like to start trading from, the markets are just going to go sideways. And then they're going to be getting ready for FOMC. Okay? So just take that into consideration when you are trading today, ladies and gentlemen. Okay? Okay, question by Peter. Here we go. I like this one. Was there ever a point in your trading career where you were like, how do I get my head around all this? Is it just time in the market and reps you got through it? I genuinely looked at it like that. I said to myself, okay, I understand that if I just keep doing this and stop forget about the novelty of time, just keep doing it every single day, read something, do something, go into something. So back when I was 17, I was doing this. Okay, I'll give you an example right here. I'll show you exactly what I was doing. This company right here, Investors Business Daily, okay? Check this out. Investors Business Daily provides this thing called the big picture, okay? And this is before, like, when you're looking at their website right now, you know, it was nothing compared to what it was when I had it, when I first started off. There was no videos. It was just a website with just writing on it, okay? And that chart that I'm talking to you about all the time, Investors Business Daily awarded that chart for me because I was one of the first subscribers to their website back in the day, all right? Now, you see this thing right here. This is the market pulse. And what the market pulse says, if I just zoom into the chart, what the market pulse does is it just gives you a bit of a snapshot on what's going on Monday, all right? So Monday's action, it says, equal weighted S&P 500 hits new all-time high, new high, small caps get up again. Current outlook, they didn't have the current outlook, they had the current outlook, but it would say market in correction or uptrend or just neutral, okay? And I would read this every single day. And what I would do is I'd get my little notes, okay? I've got journals all over the place. And I would I would take I would print this off, okay? Print this thing off here. And I would summarize whatever they were saying in the comments. And I did that every single day. I never missed a day. That's why I hated the weekends because they never did anything. I had nothing to do. But they kept on regurgitating the same information over and over again. They kept talking about the bonds, the yields. I was paying attention to the idea why certain stocks were up in volume and certain stocks were down in volume. I would go and research that stock. Then I got to a point where I understood that every time I kept on seeing this oil stock coming into play or stocks in the oil environment, it was either because they found new oil or something was changing in the economy. So then I was starting to put things together. And when I first did it, I had no idea. But I just thought by repetition itself, I'm going to clock onto something because I'm going to keep reading something that mentions something. And then I'm going to be able to put two and two together. And I kept printing this off, ladies and gentlemen. I kept taking notes upon notes upon notes. And then as you naturally do this, you then end up understanding what could effectively happen in the future based on the information, your data collecting. When you're learning how to trade in terms of the macros, you're collecting data. And how do you translate it? Why is today's data important about the core retail sales? Why do we need to focus if there is a trend in the behavior of the retail sales? Because that's going to justify if the Fed's going to be cutting aggressively or not. Now that's come into play and showed a reduction in retail sales, it tells us that people aren't actually spending that much money. That means the economy could be slowing down. And then that means the Fed is not going to cut as aggressively or maybe aggressively to stimulate the economy. So that's when you start getting into the idea of being able to put macros to the charts. Before, you've heard me say that I wasn't interested in macros because I didn't need to be interested in macros. And the reason being is because interest rates were zero. There was nothing about, we had nothing to worry about. We had a couple of wars, but that was happy days. But there was nothing to worry about in terms of where money was going to get moved to. All we knew is money was actually cheap at the time. It was so cheap with 0%, 0.25% on interest rates. That's nothing. When they start increasing the interest rates, then we need to start paying attention to certain things. And we start incorporating the dollar dominance. And that's when I started doing it because we were changing into the macros, all right? Because money was being moved. Money was being the relationship on how accessible money was, okay, is changing. And that's exactly what you're going into right now, ladies and gentlemen. You're going into an event that is meaning that big money has to be moved because now you can get more dollars cheaper. So we're going to probably see some very interesting behaviors coming into play when the market does actually factor in this rate cut. That's why it's so important. So yeah. With that being said, ladies and gentlemen, any other questions? Tips on order flow. I do loads of stuff with the guys in the Discord and the Platinum membership. I do a lot of stuff on order flow over there, okay? And anyone interested in that, just go over to the Platinum membership on the Traders Reality website. All you need to do is just go tradersreality.com. It's pinned to the top of the chat, so go check it out and you'll be able to see it for yourself over there, okay? Doesn't care about the US. G Pleasure. Tether CEO openly saying he doesn't care about the US, meaning countries asking them to be transparent. Well, that's why you've got stablecoins coming into play. Circle, keep an eye on Circle, because if they get that Circle IPO, all right, on the stock market, that's going to attract a lot of flavor to the marketplace and Tether will naturally be pushed out. What's the Diddy thing? I know it's a dump, but where does it come from? P. Diddy's been arrested. So we just thought it would be that. Yeah. From what level are we okay for shorts on NASDAQ other than 19627? Shorts on NASDAQ. I won't be shorting NASDAQ now. It can move down a little bit, but I'm not shorting NASDAQ. I'm only looking for longs on NASDAQ. Do you miss the 4 to 10 hour streams? I do and I don't, because they were taxing on the soul, man. That was hard work. It really was. What time frames do you consider MA crosses upwards and downwards 5 and 13 EMA? 5-minute time frame for short-term trade setups, 15-minute and hourly. Ideally work on the hour time frame for the 5 and 13 EMA. Tina, have you tried Basturma? Of course I have, man. What a question is that? Come on, bro. If Turkey lands NATO, what will happen to crypto? Well, Turkey can't do nothing with crypto, but if they land NATO, then that's going to be a problem with Russia. I don't even want to talk about it. And what time frames? I've already answered that question. When will they announce the rate cuts? Tomorrow. Tomorrow, 7 p.m. UK time, 2 p.m. Eastern Standard. Tino, fixed Greeks national debt. No, it's not 40% off. I don't think it's ever been 40% off. UK charging to UK charging people to come into the UK. So UK charging tourists to get into the UK. What a cheap ass country, bro. Sorry, cheap as my days. Can we hit 80K tomorrow? I'm asking you, can we? We need Bitcoin to make a good solid 40% move to the upside. I mean, it's pulling back, right? I'm purposely waiting for Bitcoin to pull down a little bit because I'm expecting that. But yeah, don't worry. Bitcoin drops now. Why? It's not about why, ladies and gentlemen. Don't lose your brains. It's been going up all morning. Okay, we're expecting a little bit of flavor back down again. Watch the NASDAQ and watch the Bitcoin. Okay. Tina, what do eggs cost these days? $6.40 I paid. £6.40. Believe in the 80K, brother. No problem. All right, ladies and gentlemen, here we go. What's your expectation for Wednesday and for the coming months in regards to Bitcoin? Look, I do believe Bitcoin is going to move up. All right. And the result of the FOMC, if we know exactly, if we get 25 basis points tomorrow, ladies and gentlemen, then everything's just going to drop. I think it's going to drop. I really do think that. And if we don't get that 50 basis points or the scope of it, I mean, flipping hell, man. It's going to be a bloodbath. Just look at where the NASDAQ is right now and where the S&P is. Like, they're at all-time highs. If we don't get the information we want, then it's going to be a bit of a problem. But you're not going to know until tomorrow. So I would suggest that anyone in cryptocurrency, the best time for you to get involved in it, okay, or the strategy that you're going to deploy is when you know where we stand tomorrow. Think like a hedge fund manager. $6.3 trillion is stuck in the money markets, and the majority of those are going into bonds, okay? They're going into bond. Look at the 30-day net cash inflow. It's all going into bonds. Look at this. Bonds moving up, like bonds, 10-year, 7-year, 20-year. It's all in bonds. That's no good. You don't want it to go into the bonds, but that means people are seeking risk off. They're not interested in exposure, so they're looking for low risk, okay? Because they don't know where they are. They don't understand, like, what's going to happen with the interest rates. Again, we're at the most uncertain in when it comes to the Federal Reserve's path since 2007. So that's where we are, okay? Told you, all of you, September 28th is going to be a bloody stream. We get 50 basis points, as odds are suggesting on betting markets. How aggressively can we expect the markets to move up, Bitcoin, NASDAQ? Well, NASDAQ will take its all-time high. S&P will continue higher. But the same way that the rates or the bets on odds for a 50 basis point went from 4% to 60%, we could go into it tonight and it could actually come straight back down. And if that happens, they've just primed the markets to move up, to come down for FOMC. Here we go. Didn't you make a bet for your 80K projection? Dress up a clown suit for a stream. Nah, I didn't, bro. That was for XRP. XRP hit $10. I dress up. But I don't need Bitcoin to hit 80K to dress up like a clown. At least we kind of understand what's going on in this mad world of trading. Who does, who doesn't? I hope I do. Anyways, with that being said, ladies and gentlemen, be sure to like and subscribe. I'll get an update out to the gang. Mad love and respect. Take care of yourselves.